Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at SteveSaretsky.com. You can find him on Twitter at Steve Saretsky. Welcome back to the show, Steve.
Yeah, always a pleasure. Thanks for having me on.
Steve, what's the latest on the Metro Vancouver housing market?
I mean, if you look at the the April stats the real estate board reported, obviously it's sort of a continuation of what we've been seeing over the last 3-4 months in particular, which is obviously an incredibly crazy hot market. But I think as you start to sort of peel back the onion a little bit, it's obviously not showing up in the data yet, just because these real estate data tends to lag. And I think certainly what we're seeing, at least feet on the ground, is the market's definitely easing up. I mean, it's still, don't get me wrong, it's still an extremely hot market, but we are seeing a slowdown, which I think is inevitable, right? I think, I try to mention this to people, right? I mean, what we're seeing is fewer showings, fewer offers, so just a natural slowdown. But again, keep in mind that March sales numbers, for example, were all-time record highs for any month, so not just for the month of March. So it's very hard to sustain that pace. And so certainly what we're seeing now is a pullback in the market. So obviously it's something we'll be keeping an eye on here moving forward.
Have the biggest price increases as a percentage of the selling price been in the low end, mid-range, or high end?
Well, we're seeing obviously, I think if you look at Vancouver in particular, right? I mean, the story really is affordability, right? I think that there's such an affordability crunch, and so anytime you're at these entry-level points, the entry-level points are always the most competitive, right? So if you're looking for an entry-level house, it's extremely tight. If you're looking for an entry-level condo, it's tight. If you're looking for an entry-level townhouse, that's just where the price pressure or the competitiveness is, because you have, again, all these locals basically struggling under high housing costs, and so everybody's trying to basically buy the same product. And so that's really where most of the competition is. And don't get me wrong, it's been a strong market all around. I mean, even for some of the higher end single family stuff in the, $3 million range, I mean, that stuff's been moving, considerably well as well. I mean, we haven't seen this level of strength since we've had the, foreign buying boom back in 2016.
Are people still moving out of the city and causing prices to rise further out in other parts of BC?
Yeah, I mean, I think that, if you look at the price charts, that we're seeing the majority of the strength, in the suburbs still. I mean, I think we're seeing obviously the downtown market coming back, but don't get me wrong. I mean, certainly the majority of the strength. I mean, if you look at right now, Langley detached house prices up 29%. You've got Abbotsford up 35.5%. So, I mean, that's where obviously the majority of the strength is certainly constrained to the suburbs.
Are a number of properties still selling at over list?
Yeah, we had, I think the latest figure I had here was, I'll tell you right now, it's 48%. So 48%, so keep it, 48% of all properties across Greater Vancouver sold above the asking price in April. So that's the highest reading basically since, since 2016. So that just kind of gives you an idea of the strength of the housing market. Again, I think everybody's well aware of what our housing market was like in 2016. Again, it was this, offshore money flooding into the market, the locals going crazy, everybody panicked and scared about being priced out of the market. You had the speculative frenzy. So 2016 was unbelievable. And the fact that we're sort of back there in terms of the number of homes selling above the asking price Again, 48%, so almost 1 in 2 houses basically going above the asking price. Now, I understand people say, well, the pushback is always, oh, yeah, well, that's just because these stupid realtors underprice everything, and of course it's going to sell over asking. But the reality is like, you don't do that strategy as a realtor. You don't implement that strategy of underpricing to generate multiple offers unless you think the market can sustain it and will actually push it up. And so actually what we're actually seeing right now is we're starting to see realtors actually reversing and changing their marketing strategy, where you're starting to see the notion of, okay, let's underprice it a bit and get 5 offers. What we're seeing now is that isn't necessarily working anymore because you're getting some buyer fatigue and sellers aren't quite getting the price they want. So now they're changing and saying, okay, instead of listing a house for, I would have, a house that was worth 1.5, I would have listed it for 1.4 and gotten a few offers and pushed it up to the 1.5 or just over 1.5. Now you're seeing what they're doing is, hey, if we think it's worth 1.5, let's price it right at 1.5, or let's price it at 1.55, give ourselves, 10,000 of negotiating room, and let's call it a day. So, you're starting to see that, I think, as the market slows down here.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Steve Saretsky. Steve, could we see 0 down 40-year mortgages again?
I don't think so. Well, I mean, not in the near term here. I mean, my personal opinion is I understand that obviously, and you can make a pretty logical argument that Canadian housing is overpriced, overstretched, valuations are extremely high, lack of affordability, et cetera, that we're due for a correction, potentially a significant correction. And that may or may not be true. I mean, we'll obviously wait and see. I mean, I think there's certainly some probabilities of that. But the way I look at it and say, okay, if we get that significant correction, let's call it 20, 25, 30% correction, whatever you want to call it. I mean, I think that housing is such a significant component of the Canadian economy that I could see that the policymakers would opt to re-stimulate. Like, they would have to, how do you get yourself out of a housing bust, right? Like, you'd have to basically restart. You'd have to basically encourage people to go and borrow money, banks to give money out. And so I could see a scenario where if you have a real estate bust, I could certainly see them opting to restart the housing market. I mean, keep in mind that residential investment has accounted for 46% of nominal GDP growth since the first quarter of 2018. So that basically tells you that, again, housing is the economy. So I think that policymakers, again, if you had a downturn in the housing market, might look to something like a 0 down 40-year amortization to re-stimulate. But as of right now, I think policymakers are more focused on slowly trying to rein it in.
Could the real estate bubble continue to grow bigger and bigger?
I mean, I certainly think so. I mean, I think that obviously I'm very skeptical of valuations. I think that we've pushed them up pretty high. I mean, the debt loads are obviously concerning. But I mean, I think that people have probably made that same argument have been making that same argument since 2005. And so, this thing kind of continues to push higher. I mean, I think I haven't yet to, being introduced to anybody that at the onset of the pandemic had forecasted higher prices, 6 to 12 months from the onset of the pandemic, let alone up 20% nationally and prices accelerating at their fastest pace ever. So, it's always hard to predict because when you think it can't get any stupider, it gets even stupider. So, yes, I think there is still room to run, and I think I look at it more of what's happening right now. I almost prefer to look at it more less of a house prices are rising and more of just like, I think the purchasing power of the currency is just losing its value. I think that if you look at Canada's money supply growth, the M2, I mean, money supply growth is running at 18% year over year. So you're growing your currency base by 18% per year. I mean, if you sustain that, it shouldn't be a surprise that why house prices are up nationally 20%. And so again, at 18% current, M2 supply growth, money supply growth, I mean, that's the fastest pace of growth since 1980. So again, I look at it more of house prices not necessarily going up, but I just think that we're losing purchasing power here. You can't just expand the monetary base and not expect there to be any repercussions. And I think that's obviously where your inflation is showing up.
Are people waiting for the COVID lockdowns to end before listing properties?
No, I mean, I think we've been over this a bunch of times on your show, obviously, but, we've got new listings running at record highs. They have been running at record highs for well over 6 months now. There's not really any fear of listing your home for sale. I think that, I think the only time we had people scared of listing their homes for sale was, March, April, and May of 2020, at the onset of the pandemic, when people were trying to figure it out, what this pandemic was all about. But I think people have adapted pretty well, and the show kind of goes on. So yeah, if you look at new listings strictly from a statistical and data perspective, they have been running at record highs, and certainly when I talk to people in the market here, I mean, I'm not getting calls of, hey, we're thinking about selling, but we're waiting until the pandemic ends. It's like, no, like if people want to sell and they want to move, they're doing that, and that's why I call it the great reshuffling, because if you look at it, there's massive turnover across the entire real estate industry, right? So you have record sales, you've got record new listings, so you've just got a lot of people moving for various reasons. And even if you look at the rental market, there's so much turnover happening right now, it's unbelievable. Everybody talks about, rents are falling, rents are down. Rents are certainly falling downtown. I mean, they're probably off 5 to 10%. Because again, people are leaving sort of the downtown core. But if you're going and looking to try to rent a house right now, I can tell you it's incredibly competitive. Rents for houses are through the roof. So again, it's just all about behavioral shifts during the pandemic. And so it is truly, everybody seems to be moving right now.
Are people using home equity as down payments to buy other properties?
I mean, I think in Canada, I think it's a pretty popular mechanism. I think that, those that have been on the housing ladder for a while, you've obviously built up home equity, and we certainly see that quite a bit. We see that, people tapping their primary residence that have built hundreds of thousands of dollars in equity and using that as down payment on investment condos. And I mean, if you really think about it logically, I mean, if you're comfortable taking on the leverage, I mean, at least from a tax perspective, it makes it a lot easier just to refinance your house as opposed to, trying to save $100,000 of after-tax money, for example, and to put it on a down payment on an investment condo, right? So, the game is kind of skewed, obviously, to those that have been on the housing ladder, and obviously, I think that's why you are continuing to create the sort of the haves versus the have-nots, obviously, where people that are, again, on the housing ladder are obviously able to accumulate more real estate as valuations continue to push higher.
We'll have more with Steve Saretsky right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are banks likely to raise mortgage rates?
Well, I mean, we've seen, for example, I think we had RBC out recently. They raised rates by 20 basis points, and that was actually they raised their rates 20 basis points simply to slow lending, simply to slow down volume. They're actually at capacity, is my understanding, and they're advertising slightly higher rates just to basically kind of almost push people away. I mean, that's how busy these guys have been. I mean, talk to any of the banks For example, people trying to refinance, which we just talked about. If you're trying to refinance right now, there's like a backlog. It's like you're almost at the back of the queue because they're so busy right now with all these new borrowers or new mortgages that they're issuing that, the turnaround time, for example, on refinancing is incredibly slow. And so, the banks, they're raising rates, they're advertising higher rates, I think, just to sort of slow down activity levels. But, certainly if you're trying to go in and actually get the mortgage, I think that those rates can actually be negotiated still.
Are most people getting their mortgages from the banks?
Yeah, I don't have the stat on it, to be honest, but I think that certainly the big five banks control the vast majority of the mortgage market. I think I can't even remember the stat. I know it's the vast majority. I don't have the exact figure, but we are basically controlled, obviously, by the five major banks here.
Is the mortgage stress test getting tougher?
OSFI, I think it was June 1st. I think that they're increasing the mortgage stress test for uninsured borrowers. So again, if you look at it strictly from a numbers perspective, it's going to reduce purchasing power, borrowing power, I should say. It'll reduce your borrowing capacity by 4.5%. So people go, 4.5%, that should have material impact in the market. But, again, when you start looking behind the scenes, you can see that there's actually, the banks, some of the Canadian banks, I should say, are actually loosening, debt servicing requirements to basically try to offset the stress test. So, and again, I understand people are, that's kind of crap. Like you can't do that. But again, I think it just kind of goes to show you that, the banks here control most of the market, and, they kind of do as they please for the most part. So, kind of summarizes this whole interview, which is, Canadian housing is the economy, and so yes, we're doing a stress test, we're increasing the stress test, but I think, I don't really expect that to have any real material impact on the market or on lending.
What do you see ahead? Inflation, deflation, or stagflation?
Gosh, I don't know. I think that, my views always change on a the way I look at it is, I think right now we're certainly in an inflationary environment, obviously weak base effects. I think that what I'll be watching for is if our money supply growth continues, right? So we have, like I talked about at the beginning of the show, you have M2 growth running at 18%, which is the highest since the 1980s. If that is actually sustained, for the next 3, 4, 5, 6 months, then, I would certainly be worried about significantly higher inflation. If it's not, then I think that the backdrop is still ultimately deflationary, which is you've got aging demographics, you've got a mountain of debt, and so I think that those are, debt and demographics are deflationary. And obviously, I think you can throw in technology as well. I think technology is inherently deflationary as well. So, it's not to say that asset prices won't rise, because I think that all this, what do we do to combat deflation? Well, the central banks just try to ramp up money printing. They try to basically do more QE to essentially offset the quote-unquote deflation, and then obviously all that, liquidity ends up into asset prices. So that's kind of my view of it. I think that, inflation could be a problem only if commercial credit creation is sustained. So that'll be the key question.
Canada overall is seeing a record high number of housing starts. Everybody except British Columbia, where housing starts are down, and they expect them to be down again next year. Why is BC lagging the rest of the country in housing starts?
I think that, obviously it's always hard to get projects pushed through here, but I think that, I don't know, we've certainly been building a lot in the Lower Mainland and BC. I mean, if I look at, homes under construction right now, we're sitting at, 47,000 homes under construction in Vancouver, in the Lower Mainland, I should say, and that is actually at a record high right now. So, housing starts, I think, are somewhat a factor of developers' ability to pre-sell as well. And I know that the pre-sale market was lagging. It's certainly picking up now, but there's still not a huge foreign investment boom. Like, so for example, like the majority of, well, maybe the majority, probably close to the majority, but like a lot of the new high-rise luxury towers, particularly downtown, like that's all being sold offshore, and that market still hasn't really come back to what it used to be. And so I think that's partially a result of fewer housing starts maybe, but I think that we still do have a pretty huge pipeline coming here, right? Of homes under construction, and looking at housing starts year over year, still pretty strong.
What's going to happen once the government's immigration gates open again and we start seeing tens of thousands of new potential Canadians entering the country?
Yeah, I mean, I think that it's certainly something to watch for. I mean, I think like I look at it and say, okay, if I look at it strictly from a data perspective, and if I'm looking at it from what we're seeing on the ground, to me it feels like, okay, we probably put in the top for this cycle in March. That was probably the top. Now, in terms of restarting then sort of the next cycle, or picking it back up in maybe 3 to 6 months or 12 months or whatever, like I think that certainly immigration and foreign investment could be a driver of some of that. I think it's going to have to be. I think we pulled forward a lot of demand domestically. So it's certainly something we'll be watching. And, yeah.
Are we heading towards a surveillance state leading to even worse things?
I don't know. I mean, I don't know if that's necessarily for me to comment on, but I know that there's some controversy around, what is it, Bill C-10. Certainly for someone like, this show, or even, my YouTube show, that, we certainly would prefer the autonomy and not have to be rubber stamped by the Canadian government as to what we can or cannot say. So I think it's certainly a slippery slope, and that's just my opinion.
Is the constriction of people being able to move by all levels of government good or bad for real estate prices?
The restrictions on people being able to move, I mean, I think that people are moving regardless. I think we're in this sort of, again, the great reshuffling. So I think that has certainly been the pandemic. Housing has ironically, surprisingly been the winner of the pandemic here. We talk about, K-shaped recoveries and industries that have benefited and some that haven't, and I think real estate is obviously one of them. People are just spending an inordinate amount of time at home, and obviously careers are changing and, work from home and all this stuff, so housing certainly benefits from that.
In theory today, would you be a buyer, seller, or holder of real estate?
I mean, I think it always depends on the individual situation. I mean, like certainly for myself, obviously I own and hold real estate. I mean, investment properties, those are longer term plays, despite what will inevitably be fluctuations along the way. I mean, now if you're asking me, okay, is it the best time to buy a single family house today? No, I don't think so. I mean, prices are up 30% year over year. I mean, that's incredible price appreciation. So if you're buying today, or if you bought in March, which again, like I said, I think looks like the top. I mean, the reality is you're probably, you're going to have to you're looking at a longer term hold now. Do I think that if you bought in March of this year, that, in 12 months from now, you could be down 10%? I think that's a realistic scenario. I'm not saying it's inevitable, but, when you have 30% price appreciation, if you look at again and people that bought in, say, 2016 or 17 in our last peak, I mean, it's only in this recent boom where a lot of those buyers have been able to sort of exit at higher prices, right? So, that's how I look at it. Now, if you ask me, hey, would I buy a condo downtown today? I would argue that market is probably undervalued. So I think there's pockets of the market that, again, are obviously more frothy, and there's pockets that I think are arguably undervalued.
Some people are calling for legislation that gives people either a 7-day cooling off period on a real estate deal, because so many people are buying with no conditions attached to the sale because they're so desperate to buy. Should there be a cooling off period so people have a chance to maybe examine the property before they sign on the bottom line?
I don't really think so. I think it's just going to create. I think that people that make these suggestions don't actually work in the industry, and they don't really understand how it really works. I mean, it's like I don't necessarily come in with policy opinions in the tech industry, for example. It's just not my industry. I think that you'd run into a whole host of problems by doing that. I mean, you start having deals collapse, deals that are you have other deals that are contingent. That's not the root of a problem. The root of the problem is that there should be better ways to structure multiple offers. I think that the process there is incredibly flawed. I think anyone in the industry will probably tell you that. I've personally spoken to regulators about it. I don't think there's any desire or appetite to actually change it. I think that a lot of these people are extremely lazy and unwilling to think creatively and outside of the box. I mean, I always look forward, and I think it's inevitable that I think in the next probably 5 years or so, I think that could we implement a system where you have to register bids on a blockchain, where it's all there. It's a transparent system. It's a decentralized system where you can register bids. To me, that makes a lot more sense. But again, obviously, the real estate in terms of adapting technology are always years behind.
Should home inspections be mandatory before a sale?
I don't think so. I mean, I think that's up to the individual. I mean, I'll be the first to tell you I've certainly bought and sold enough real estate here on my own that for someone like myself, there's times where I don't do inspections even for the own properties that I buy, just because. Okay, for example, if you're buying a 2-year-old brand new condo or 2-year-old condo, like, is there really a point to doing a home inspection? I mean, what are you going to find? They're going to go in and inspect the inside of your 500 square foot condo that's basically brand new. They're going to turn on the taps and run the appliances. Like, I mean, it's much different than, okay, now bring an inspector in for a 75-year-old home on the east side. That's probably when you want to do an inspection because there's much more fine. It's like, again, I think that some of these policy suggestions or whatever that think they're going to be useful to actually help the market or somehow create affordability. I don't think that's the solution.
Yeah, and also if you're just buying the property, you don't care what's on top. You're just going to knock it down and build something else. Yeah,
exactly. So there's all these unique cases, right? I mean, it's just like it's an individual case-by-case basis. I mean, like, what if you're a contractor by trade, or what if you're a tradesperson, like, and you can pretty much almost do your own inspection, like you then have to still hire somebody. So it's like, I mean, these sort of policy decisions to me don't make any sense.
Steve, thank you so much for chatting with us. How can people get in touch with you?
Just by email, steve@stevesaretsky.com, or you can find me on Twitter as well. Pretty active on there @SteveSaretsky.
Steve, thank you again.
Thanks, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. If you have any questions for Steve, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.